I'm going to tell you guys about a stock to buy in order to capitalize on Biden's $2 trillion infrastructure plan. Stay tuned. We're going to evaluate the business model, check out their management team, look at their financials, and then look at the risky business with this business. Infrastructure and Energy Alternatives, or IEA, is a leading provider of infrastructure solutions for renewable energy, traditional power, and civil infrastructure industries. Now, IEA serves its customers in the United States and they're based in Indiana. This company operates in renewable energy, power delivery, heavy civil, industry and power, and rail and environmental. It is important to note that IEA is one of the leading North American providers for infrastructure services. They get 65% of their revenues from renewable energy. The other 35% of their revenues come from civil services like rails, bridges, and highways. Now, this company has obtained some milestones, and if we look at some of their rankings, they are number 2 in wind/solar EPC, top 3 in coal ash remediation, top 20 in rail infrastructure, and top 20 in highway construction. Now, that sounds like a pretty compelling company to me. Now we need to talk about what Biden's $2 trillion infrastructure plan includes, and that is to just address some of the country's problems that are including damaged bridges, unequal broadband access, climate change, and care for people with disabilities and the elderly. Now, there are 3 categories that are going to help IEA stock, and those categories are electrical infrastructure, which is supposed to be about $100 billion, and highway, bridges, and roads, which is supposed to allocate $115 billion, and lastly, passenger and freight rail, which is supposed to allocate $80 billion of this $2 trillion package. So off these numbers, we can see that the whole infrastructure plan is going to help out energy and civil services, which is going to help other energy companies and infrastructure companies like IEA. Now, looking at IEA's supply chain, we can see that they have 3 customers, which would be Algonquin Power and Utilities, I don't know if I pronounced that correctly or not, and Apex Clean Energy, as well as Cordelio Power. And these are all relating to renewable energy, as they are part of that $100 billion of government spending that would be towards, renewable energy. In more recent news, we can see that IEA has secured a $17 million construction project with California's Department of Transportation. Now, this is mainly for the city of Sacramento and the rehabilitation of the Sacramento River Bridge. Let me tell you guys, so I'm from NorCal and we literally have potholes everywhere. Whether you're driving on the street, driving on the highway, and you can't go a day without missing one. And you'll be driving on the road and you'll be playing dodgeball with these potholes in the ground. And you don't want to hit those potholes because you're going to get curb rash and you're going to scratch up maybe your bumper and your rims. And if you look at my car, I got some curb rash on the side of my rims and people think I'm a bad driver, but it's really the potholes. It's not me, all right? So I would say that California does need restructuring and we do need to fix a lot of the roads because the roads here are kind of not the best. Now, with Biden's plan, I do expect more infrastructure spending to come, whether that be in California or other states. But California, we do have the money as we do pay a lot of taxes in California to make that happen. Now, if we look at this chart, California has the 10th highest tax burden in the USA. Now, I think that California could put some of these taxes towards fixing some of the roads that have cracks and have potholes in them. Also, IEA has been awarded with $50 million of wind construction contracts in Iowa. Now, this contract is worth approximately $50 million, and this is supposed to go towards sustainable energy and renewable energy. Now, this award was for the construction of a 200 megawatt utility scale wind farm in northwest Iowa. IEA will self-perform all of the engineering, procurement, and construction needs of the project, including the construction of project roads, installation of foundations, offloading of equipment, and erection of 73 GE wind turbine generators. So we can see that IEA is getting contracts from other states and they are helping out in the terms of renewable energy and just fixing up civil operations. Now, going to the management team, we got to look at the CEO, right? And his name is John Paul, or JP. Now, he has experience in this industry and he has about 17 years in White Construction, which is another energy company that does wind energy, solar energy, industrial power, and heavy civil. It's very similar to IEA. Now, in fact, IEA actually owns White Construction. So the CEO is obviously quite experienced in this field and he does have quite the resume that he's built up for himself. Now, he's been at IEA for about 8 years, and what has he done at IEA? He's done something right, because in 2017 they had 0 revenue and in 2020 they had $1.7 billion in revenue. Now, that is immense growth and they have grown about 20% in the past year. The market cap of IEA is about $300 million, and that's really small, and I do like these really small companies just because they're really undercovered and not a lot of people are talking about them. Now, looking at the stock chart, they're down about 42.60% at the time of this recording from its all-time high. Now, if we dig through the financials and try to find some value here, I'm sure we can find something, so let's dig into them. Now, going to the financial health of this company, the total assets are about $729 million, where the total liabilities are $801 million. Now, this might be concerning to you at first glance because the liabilities are more than the assets, but we have to go deeper. If we look at their cash, they do have $164 million in cash, and their current debt is about $36 million. Now, I do not think that they are going to go bankrupt because they have more cash than their current debt. Looking at their revenues, in the past couple of years, they have been able to achieve double-digit revenues, and next year they're expected to bring in 3.8% revenue growth. Now, I think that they're kind of sandbagging this number because with the infrastructure plan, more revenues will come to them, and Biden is just pumping out money to these companies. It's possible that they might beat, so we're just going to have to see. Now, going to the valuation metrics of IEA, they had revenue growth of 20%, enterprise value of $421 million, gross value of $188 million, and EBITDA of $137 million. Now, the enterprise value is just the market cap plus debt minus the cash, and this just gives us a more true value of the company. If you were to buy the company out, this is how much it would cost. Now, the gross profit is the revenue minus the cost of goods sold, and this is just how much profit we're able to retain as the business from operating our services and creating our products. And as for EBITDA, we could look at it as more of a cash profits or earnings for the company. Now, if we look at the EV to gross profit ratio, we can see it's sitting at 2.23, and this is just how much of profits the company is able to retain in relation to their true value. And looking at the EV to EBITDA, the company sits at 3.06, and this is just how much the cash profits the company is able to retain in relation to its true value. Now, we want lower multiples because it will present us a cheaper company and we're spending less for the company's earnings and gross profits. So I simplified it down for us and already took the calculation of one of the other competitors in relation to IEA stock. Now, if we take IEA stock and compare it to another comparable company like AECOM or ACM, we can see that their revenue growth is a lot smaller at negative 1.5, and they are trading at much higher ratios of EV to gross profit and EV to EBITDA. Now, you don't really see that many companies trading as cheap as IEA is today. Now, we know that with Biden's infrastructure plan that their gross profit should be able to rise as well as their earnings. But now we need to talk about the risky business with this business. Now, what we know right now is that Biden's infrastructure plan still has to get passed, and that $2 trillion of allocated capital towards infrastructure spending might not be at the said value. And if it is less than the $2 trillion that we are expecting, then this government money might not be going towards as many energy companies, so IEA may not be able to capture as much revenue as intended to be in the first place. Now, we also need to consider, what if they lose some of the contracts with the states that they're operating in, or they just stop creating contracts overall? Then the company would be hurt in that situation. But overall, I think that some of these things are less likely to happen, and we're likely to see some optimism out there. In more recent news, on May 5th, 2021, IEA is supposed to have an expiration lockup for their shares. And this just means that insiders are able to sell their shares, and this could increase some of the selling pressure on the stock, meaning that the stock could potentially go down. Now, on May 10th, they're expected to release earnings after the bell, and that's something that we should keep an eye on there. Overall, they are a legitimate business. They are trading at cheap multiples. They have revenue growth, and Biden's infrastructure plan should be able to help them out. So it doesn't look too bad buying here today at $13 to $14 per share. Now, I think that we might actually begin to see a shift in cyclical names as Biden's infrastructure plan rolls out. But I need to know, are you guys buying IEA stock? Let me know down there in the comment section below. And if you would, please consider liking and subscribing to this channel, just because these kinds of videos take hours of research to make. But remember, to invest in only the best. Peace out.